good afternoon. You're watching Closing Trades on ET Now. I'm Anisha Jain. With me is Vinny Motiwala. And for now, the market has recovered from the lowest point of the trading session. But at one point of time, there was a clear scare in the market where the Nifty had dipped below the mark of 22,000 thereabouts. And there was a sharp fall that we witnessed in the mid-cap and the small-cap indices too. But at least 22,000 is something where the bulls have fought quite well. And that's why they've managed to defend that level in the market right now. In terms of the individual names, from the frontline index, it's TCS, which is continuing to support the move. So, of course, it's off the highest point of the trading session. But after yesterday's up move, that stock has continued momentum. And the other defensives per se, your insurance companies, SBI Life, HDFC Life, these are the stocks which are actually batting for the bulls today. On the losing side, Apollo Hospitals is down, Bajaj Auto, Eicher, Maruti. So, clearly, auto is not having a great day. And we are seeing that slip in the auto index today. So, clearly, of course, it's a bit of a volatile market, but for the banking index as well, all the constituents of banking index are in the red and firmly so. Bank of Baroda down 2.25%, IDFC First Bank, AU Small Finance Bank. I mean, these are kind of moves that we expect on the day of expiry. That there are the volatiles move that happen midday, but it seems like Vinny, this has come a day before and a lot of jagged edges across the street, and it's pretty much red.
Absolutely. Pretty much red is what we're seeing coming in. But let's bring on board our technical analysts for today as well. And we have Nooresh Merani as well as Kunal Bothra joining in with us. A very good afternoon to both of you all as well. And Kunal, right now when we're seeing the charts on the screen, look at it, when it was trading in the green, and then the Nifty again saw a sharper fall coming in at one point of time when you look at the 22,200 levels. Then again it fell sharply. Then after that, after 22,050, then again a sharper fall came in. Any indication that is of sort of a market, or will we be able to sustain this 22,000 level at some point, or how is it looking like, or is this just a expiry fear kind of a thing?
It's the expiry action which is at play. Of course, rollovers being one of the key prominent points over here holds a lot of significance. We are penultimate day towards the Feb series expiry, so I think that's one major indication. But then the second factor which you also mentioned is also quite important, where the indices retest their psychological round figure numbers. Whether the Nifty retested the 22,000 levels, the Bank Nifty I think at one point was on the verge of breaking significantly below the 46,000 mark. So these are round figure strikes, and that generally gets tested on the expiry day. But the action I think has happened one day prior to the expiry for the indices, and I think that's a bit of a surprise for traders. I would believe that the two levels which I've mentioned for the indices specifically are very, very important and significant from a short-term trading perspective. 21,900, which is now a fresh support for the index. So 21,875 to be precise on the spot levels for the Nifty holds a lot of important significance as a short-term trader. I think 46,000 now on closing basis could remain as a key pivot support for the Bank Nifty.
Okay, that's on the Nifty. Bank Nifty resistance level 21,009. Support is actually at 21,900. That's what you're saying for the Nifty at least, Kunal. But Nooresh, let's talk about where you see it moving in terms of the broader market as well, right? Because that today has started underperforming. So if you want to understand in terms of the broader market front, what is it that one should pick up from this move that we've seen? We have seen a lot of underperformance in this week, 2-3 times that broader markets have actually underperformed the benchmark indices. So what is it that one should watch out for?
So if you look at the last 10 sessions, we did hit a new all-time high on the Nifty couple of times, but did not happen the same on the small cap and the mid cap indices. And until now, it was generally the small cap indices hitting first new all-time highs and then the Nifty coming up. So underperformance has been there, and now we are seeing today the indices are down 1.5 to 2%. So that's your first indication that the momentum is waning off, and this is the time as a short-term trader one has to be careful, keep getting out wherever the stop losses are hit. So for now, the view is mid cap and small caps. There are many stocks which have overrun, and they can take a 15 to 20% knockoff from the highs. Some of them are already down 8 to 10% from the highs made recently. And there could be some more correction. So one has to be careful on the mid cap and small cap segment. Don't be in a hurry to buy the dip.
Don't be in a hurry to buy the dip. But Kunal, what's been all the more stark today is the kind of debacle that we have seen in the mid cap and the small cap space, right? And I'm sure the pain on the portfolio level is going to be much harder. In fact, as we speak, we are below 22,000 yet again.
Correct, yeah. So I think, intraday you might see the 20-30 point dip keep on happening. But I think what matters is on closing basis, and especially I think post the 315 mark, I think is where we would probably be going into a decisive angle that whether the Nifty closes below the 22,000 mark or not. But yeah, I think the pain for the mid caps and small caps was actually being felt over the last couple of days also. So at one point of time, the indices were moving up higher. They were showing signs of robust price action for themselves. The sector churn was clearly visible where the mid caps and small caps were slightly underperforming, and the large caps and more of the underperforming stocks like private sector banking names, these were the ones which are showing signs of outperformance. So I think the markets are now going back into the same tilt of maybe the mid caps and the small caps continue to underperform, and some of the private sector banking names are still holding up quite well for themselves. So I think what we need to see now is that post the sell-off, in case if the sell-off gets arrested, say in the next couple of days, is there any major sector churn, sector rotation which starts off again for the indices? We saw similar sector churn happening for the index when we saw a similar sell-off, a couple of days of correction where the private sector stocks, they started to move up higher. Then a few weeks back when we saw a sell-off of sorts, you saw the private sector banking names managing to pick up pace. So all we need to see now over the next couple of days, if in case the indices stabilize, is that whether a fresh sector churn is at play or not.
Okay, whether a fresh sector churn is at play or not is something that we should watch out for. But Nooresh, when you look at it in terms of today, what is managing to just at least give some bit of a support to the markets is the Nifty IT, and when you're seeing something like a TCS, Infosys, those are the ones which are still managing to hold on to some bit of a green, at least the last time I checked it. So let's pull up TCS, Infosys as well. Both of them are managing to hold on to greens. TCS is managing to hold on to 0.5% gains. Infosys is managing to hold on to 0.4% in gains. Is that something of a sort of a play that one could see coming in from the IT pack in terms of the large cap ITs now, something that could start seeing that move coming in on the charts, and that is something we'll see a support from?
So again, out here the momentum is not great. It's been a slow and steady up move. If you look at TCS, every time it has made an uptake, then it has again drifted lower. So out here maybe this move could take it to 40 to 50 and then again drift lower. Infi, on the other hand, has not really gained in a sharp way. It's still down 15-20% from the highs made in 2021. So out here, the trend is slowly positive on the back of what is happening globally. We've seen Nasdaq 100 do well, and global IT stocks also making a bounce back, but not the best trade to be right now. So the view is very simple at this point of time when the momentum is waning off. You have just one or two stocks holding onto the index. We wait for the heavyweights. So we need to wait for a Reliance, ICICI, etc. to actually start supporting the markets. Till that point of time, we are still in this flux. And in one case where you want to keep a strict stop loss below 21,850, 900. So for now, it's a point of touch and go, wait it out.